Hi, and welcome to this week's The Mortgage Broker broadcast. I'm your host, Craig Skelton, and over the past few weeks, we've been exploring what it means to think like a financial advisor, adopting a long term mindset, building recurring income, and focusing on the whole client journey, not just the next transaction. We looked at the remortgage boom, annual reviews, and non indemnity protection. Today, we're going to close that mini series, shall we say, by talking about why you should be working with a financial advisor and how doing so can uncover opportunities you might otherwise miss. As mortgage brokers, our role isn't just to arrange the mortgage. We sit at the heart of people's finances. We know their incomes, their debts, family situations, and their goals. That puts in a unique position to spot when they need more than just a mortgage, whether it's retirement planning, investment advice, or wealth advice. But unless you have the necessary permissions, you can't give regulated financial advice yourself. That's where a trusted financial advisor comes in. And that's what I want to talk about today. So, today we'll cover the growing demand for holistic financial advice and why mortgage brokers should care, the benefits of referral partnerships for you, your clients, and your business, how to spot wealth opportunities during the mortgage fact find, conversation starters and compliance considerations when introducing a referral, and the next steps to build your own network of trusted advisors. By the end of this episode, you'll see how working with a financial advisor isn't just about an add on, it's a core part of serving your clients better and future proofing your business. Let's start with a bigger picture. The UK has experienced what some say is a wealth boom. Research suggests that retail wealth could exceed 5 trillion by 2030. Yet there's a widening gap between the number of clients needing holistic advice and the number of advisors available. Mortgage clients are often financially savvy and have complex needs beyond just securing the loan. Many high earners don't have a long term saving strategy. Remortgage clients are looking for stability amid rising costs, and parents or grandparents are thinking about inheritance planning. At the same time, consumer expectations has changed. Clients increasingly expect advisors to look after all aspects of their financial well-being. If you don't, they may be tempted to go directly to a holistic financial advisor who also does mortgages, which then risks your relationship. By partnering with a financial advisor, you stay involved in the conversation and help clients access the expertise that they need. This isn't about doing everything yourself. You coordinate the specialists, ensure that the right advice happens at the right time, and remain the trusted first call. So let's look at the benefits of referral partnerships. Why should you build a referral relationship with a financial advisor? The first thing is it retains and deepens your client relationships. One of the biggest risks for mortgage advisors is losing clients to a holistic financial planner who offers both wealth advice and mortgage services too. So by partnering with a trusted financial advisor, you keep your clients in-house, shall we say. You stay at the center of their financial decisions and you demonstrate that you care about more than just their mortgage. You also unlock new revenue streams as well. Referral arrangements often include a fee share. So, for example, some wealth firms pay 25% of the initial advice fee for referring clients. In some cases, and some firms I know, you may also earn a percentage of fees from subsequent referrals as well. This creates an additional income stream without the need for you to take more qualifications or take on the whole financial advice compliance world. It also helps create reciprocal referrals too. When you refer clients to a wealth advisor, you often find the referrals flow both ways. Clients seeking investments and retirement planning will also need mortgage advice for purchase, equity release, or investment properties. By building a relationship with advisors who share your values can lead to a steady stream of quality leads. You're also future proofing and enhancing your brand. More clients are seeking advisors who can offer a comprehensive view of their finances. Mortgage brokers who embrace this collaborative approach will stand out by demonstrating that you can connect clients to trusted specialists. You strengthen your brand as a problem solver and a long term partner. And don't forget the power of word of mouth. People trust referrals from friends and family, and referral programs have high conversion rates. A well managed referral network taps into this trust, developing high quality leads who already value what you do. So let's look at spotting wealth opportunities in the fact find. How do you know when a client will benefit from a financial review? The answers are often hiding in the fact find. So a few profiles to watch out are high earners with limited or no wealth planning. They have substantial incomes but no clear plan or long-term saving strategies. Ask questions about pensions, savings and investments. Also look at remortgage clients who are seeking stability. They may be concerned about future expenses, retirement, or making their money work harder for them. Explore whether they'd like to discuss long-term financial goals beyond interest rates and repayment terms. And clients with dependents, this is an easy one. Parents and grandparents often have questions about protecting or passing on wealth. This opens the door to discussions about inheritance tax planning, trusts, and education funding. During the fact find, listen for clues that the client may need more comprehensive advice. Are they worried about their retirement age and how their mortgage term is aligned with it? Are they sitting on large cash reserves that they aren't investing? Do they mention wanting to help children or grandchildren onto the property ladder? Each of these signals could be the start of a wealth conversation. And introducing wealth management doesn't have to feel like a hard sell. It's about asking the right questions at the right time. One simple thing to do, one simple way to do it is do when you're doing the fact find, ask the question, do you have a pension? If the answer yes, that's great. Then is it on track to achieve what you want to achieve by the time you retire? Most people will not know the answer to this, which then means it's a referral. If it's a no and they don't have a pension, then it's a referral as well. And when you're talking about mortgage term, so a 25-year mortgage, is that when you're looking to retire? We already asked this question as part of the fact find. Again, why that age? Why that age are they planning to retire? What plans do they have in place? If they have savings, then great. Are you confident that these savings and investments are working hard for you? This opens the door to discussing investment strategies, diversification, and the pension. One question you could ask is, have you had a full financial review in the last 12 months? This question sort of resonates across a lot of demographics and leads to sort of meaningful conversations about investment strategies, inheritance planning, and long-term financial security. So just when you're having a conversation about the fact find, talking through the fact find, think about the opportunities, the questions you're asking, and whether that could then lead to full financial advice. And when you identify a need for wealth advice, the next step is to introduce your referral partner. Make it clear that you're signposting them to someone you trust. So if you're convinced that working with a financial advisor is the next step, how do you get started? Well, the first thing to do is identify your client needs. Look at your existing client base to see which profiles are most common. And then research potential partners. Look for local advisors or firms who specialize in areas your clients need, such as pension advice, investment advice, retirement planning, estate planning. Do your research. Look at the reviews. What's the positive feedback like? And once you've found those people, meet and assess the fit. Have a conversation with potential partners about their process, their client experience, and remuneration. Make sure your values are aligned because you're trusting them with your clients. And then formalize the agreement. Agree the referral process, what the fees are like, and communication expectation. Make sure the agreement is compliant with all the rules and regulations and it's clear about who is responsible for what. And then maybe introduce gradually. Start by referring one or two clients who you feel will benefit from a conversation. Monitor the process closely. Collect feedback from your client, and maybe you need to adjust your approach. And then start to promote the service. Let your clients know that you can introduce them to a trusted financial advisor. Include this in your annual review process, marketing materials, so socials, that sort of thing, and your website too. Make sure it's on your website. But remember, referral relationships are built on trust. both between you and your partner and between you and your clients. Choose advisors who will treat your clients with the same care and attention that you do. Working with a financial advisor isn't about handing your clients off, it's about expanding the circle of expertise around them. And as we wrap up the Think Like a Financial Advisor mini-series, remember the common thread running through each episode, which is about long-term thinking, whether it's building recurring income with non-indemnity protection, committing to annual reviews, or partnering with a wealth advisor. The goal is the same: to create a sustainable, client-centered business that thrives in any market. So look back at your fact finds and ask yourself, how many of my clients could benefit from a wealth review? Reach out to a trusted financial advisor and start the conversation today. So that's it. That's this week's episode. Thank you for listening to the Mortgage Broker broadcast. If this episode has inspired you to explore new ways of serving your clients, please share it with other brokers. Please share it with colleagues. Leave a review. Remember to subscribe. And as always, focus on what you can control. Keep building the business you truly want. Run your own race.